everyone, and welcome to this podcast for building regulatory credibility in GT Risk Week. This is the first time we've come together for sharing our insights on a matter that is very relevant in today's age. We've seen a lot of recent specific issues around crises that happen, and a lot of them are regulatory in nature. And that has put us in motion to think about what do you do to build regulatory credibility and something that is very soft and yet very powerful from the point of view of overcoming crisis today. We've seen regulators do very deep investigations. We've also seen a lot of maturity in the whole regulatory framework that's coming about in terms of regulations and governance, and the use of technology is just mind blowing. In with that context, we have two very eminent guests joining us on the podcast today, and let me have the pleasure of introducing them. We have Sharad Abhyankar, who is a senior corporate lawyer and partner at Khaitan and Company with over 35 years of experience in M&A, securities law, telecom regulations, and corporate governance. He advises global clients, serves as an independent director, teaches law, and contributes to policy making and governance initiatives in our country. Thank you so much for joining us, Sharad, for the podcast today. And
Thank
second,
you. Thank you for the opportunity.
thank you so much. And second, we have Ghanshyam Singla, who is the head of internal audit at Paytm with over 24 years of experience in internal audit, governance, and risk management. He is a chartered accountant and company secretary by qualifications. He also holds certifications from ACCA UK, ISACA USA, and he leads risk control and compliance programs. He's done this across various sectors, including telecom, banking, consulting globally, and has been responsible for driving operational efficiency and robust governance frameworks. You know, um, if we all look at the recent environment today, the type of different regulatory risks emerging are also myriad. You have risks from the antitrust perspective, you have risks from the ESG perspective, and the very recently launched rules around digital data and privacy that have come to India. Now, all of these put together, combined with the new age sectors that have come up, at the level of complexity challenges from the points of view of corporates that we have never seen before. We are all learning in this journey. And in this journey, how best to start the session by asking Sharad, Sharad, in your experience, what are the top three things that are effective in establishing credibility in the eyes of a regulator, whether or not there is a crisis looming on their head?
Okay, great question. Thank you for this opportunity. I mean, this is one topic which is so close to my heart, and we keep on training several boards. Um, so let's talk about regulatory issues. Let's start with compliance. Compliance is binary. Either you are compliant or you are not compliant. There is nothing really in between. Uh, if you look at the director's responsibility statement, that all boards, whether you are a private, public, listed, all of them sign a director responsibility statement, which says that the company has systems. Company has adequate systems for compliance of all applicable laws, and they further certify that these were not just adequate, but they were effectively working throughout the reporting period. That's an unqualified certification that goes to the stakeholders. So unlike auditors, you are not able to qualify that certificate. So what is it that you will be able to demonstrate that this statement holds good for the company, for the board? So first is put the compliance on the board ownership. As you see across the regulations, whether it is Companies Act or SEBI, I think the emphasis has clearly moved from later to spirit and LODR. In fact, but if you look at clearly, there are several places at which it keeps on saying, please comply with letter and spirit. please comply with the purpose of the law and so on. So I think putting the compliance at the helm of the board ownership, that ultimately the board will take the responsibility for compliance, whether smaller or bigger. I think that's a cultural demonstration that you need. So how do you do that? You first and foremost, you must have a compliance policy. You must have a compliance matrix. You must have a, proper custodians of who will do what level of compliance, and how that pyramid of reporting will ultimately culminate into the CEO certificate or AMD certificate. So till the time the board says that as a company, we are the company because the law says so, that the directors are empowered to do everything that the company itself can do under its memorandum and articles. So, subject to provisions of law, the board is the company, and therefore they have no other place to really backstop their obligation or their responsibility. So with that, I think the first and foremost, do you have a compliance policy which is robust enough? And do you also have, you know, all your committees, particularly the risk committee, what kind of risk they are looking at? Regulatory is one part of it, but do you have a robust risk matrix, whether it's technological, whether it's competition, whether it is regulatory, whether it's technological? There are several risks that an organization will face. So, apart from the compliance policy and charter, do you have a very robust risk matrix? That's the next one. And also, as the compliance goes on, I think, do you have appropriate reporting, whether it's audit, risk committee, head compliance? You must have a applicability matrix of laws, and you must have proper custodians who will own up their responsibility for at routine intervals. Apart from that, I think how to make compliance from just a tick box to an appropriate compliance. So there are three levels of compliance that you see. Apparent compliance, which is a completely tick box. Adequate compliance is where you say that, okay, I understand the law, I want to apply the spirit of the law. And appropriate is, of course, the next level where you say, we don't care whether there is a law or not, but we want to apply a standard which is even above the law. So how do you hardwire that culture? I think that is most crucial. And unless that comes from the top, the organizations are now quite rarely able to really adopt it. The second phase, when you have really a issue of credibility, that are you really compliant, then I think you must have a audit ready evidence, and maybe getting frequent independent assurance on the compliance itself. I think that will go hold the company in good stead. The last one is you have to be transparent. You have to be transparent and proactive with regulators, with the market, with the stakeholders. So, how do you take from compliance to governance? There are only three words that define governance. It's trust, transparency, and accountability. I think if all your SOPs, all your, including say things like document retention policies, access controls, versionings, your structural digital databases, if all of those create really the entire organization is working towards compliance culture, I think it will be easier. But these are some of the, easy pointers that a company can demonstrate.
I mean, you put them easily for sure, but they're certainly not easy from the point of view of a corporate who really needs to put that in place. And to top it, if you have corporates like large corporates who've been through the entire growth journey from startups to being accountable to public shareholders in the country, this journey itself is very varied at different stages of growth. I think the person who can help us understand, so Ghansham, is how do regulatory expectations and compliance requirements shift in your experience, right? As a tech company progresses over this journey from startup to high growth to maturity, and then comes in a different level of expectations that regulators and other stakeholders, not just regulators, would have, right? So here I'd like to bring in Ghansham to share his experience with us.
Sure. Thanks, Vishal, for having me in this session. Very exciting and very relevant in nowadays world. What I can maybe talk about, the regulatory expectations would evolve significantly as the tech or any fintech company, scales its operations. Maybe let's start from the startup phase when companies start the operation, like basically innovation or entering into or trying to solve any kind of issues or problem at on the ground. And if these businesses are regulated, regulator would expect a basic compliance hygiene, like minimum standard should be complied with, before an entity or any of these startup scales up their kind of day-to-day operations. And these would include the KYCs should be in line with the expectation, the regulatory guidelines, also the customer consent, the services or the products which are being sold to the kind of customers should have adequate consent. The thing should be kind of marketed, without customer does not requested for or does not kind of intended to purchase. So all those things, then onboarding of the customers or the vendors, in the ecosystem, the startup should have adequate controls. So these are the kind of early, I would say, the expectation from the regulators. Just to give you example, when these PPI norms, wallet were launched in 2020 or 2021, so RBI was kind of keen on that. You should do a minimum KYC, at least limit-based KYC. If you do only one document-based KYC, your limit would be, for example, 10,000, 20,000. If you do a full KYC, limit will be 1 lakh, whatever. So they kind of give you the option, like in what way you want to drive your kind of operations and the compliance around that. So, and also regulator would expect that intent, minimum control, and the proper documentation should be maintained across all the control environment of the ecosystem in the startup stage. Once this startup stage is crossed, then maybe next stage would be a high growth stage when the operations are starting scaling up, maybe into millions, I will not say billions of transactions, but yeah, it kind of a sizable kind of share of the business is being controlled by the organization. Then a regulator would expect structured governance, then clear risk ownership and stronger IT controls. Sharad has talked about many of these already, very kind of robust kind of compliance policy should be adopted, like accountability, defining who will own what if something goes wrong, what are the corrective and the preventive steps should be taken. Transparency is always, I would say, a basic requirement from the regulator. I think regulator do not kind of expect that 100% all the organization will be perfect in the all the scenarios, but whatever is being faced as a challenge, and sometime I have seen in my experience, regulators offer kind of or extend their helping hand to solve. Okay, let's speak to this person or that person, how to, because this is not only your problem, this is a problem at the industry wide. Or maybe they give you some relaxation. Okay, maybe informally, okay, maybe continue doing this, but yeah, these are 2 or 3 things are very very important, keep a close eye on these things. Maybe so that is one thing where the regulator comes and partner with the kind of companies at the medium scale basis, medium scale operations. Then let's take a final stage when the organization reaches to a very very matured stage and becomes a, like you good a good example, like getting a listed. And once this listed, then various other regulations like SEBI, LODR kind of comes in, and all these listing requirements, stock exchange requirements also comes in, which heavily talk about the corporate governance, disclosure of any material events to the stock exchanges, whatever the fine, maybe it's 10,000 fine comes to organization by any authority, even that kind of need to be disclosed to the board and if required to the stock exchanges, because that's how the transparency will further enhance. on the control ecosystem to the wider stakeholders and the regulators. Regulator would also expect like stringent because the now organization has reached to a sizable kind of a portion of the industry share. A very kind of stringent expectation, the resilience on the data governance, IT GC controls specifically on the user access management, change management, keeping a very strong audit trail for any events. Uh, Also, I just want to mention one thing. Even the kind of companies that talks about maintaining the audit trail for any financial systems, and last year, I think 2023, many of the audit reports were qualified, to that respect. The audit trail was not kind of, because systems were not designed in that manner, but regulator was cognizant of that fact. It's more like a system limitation. It's not the intent, but now that problem is getting solved. So that's how maybe regulator is coming in and keep on guiding various entities on to like how the compliance and the governance kind of expectation would go further high and get further strengthened to avoid any surprises or kind of events in the future.
No, that's very insightful and very typical of how at different stages you can actually take help from regulators, and that's my key takeaway. Something that we very often tend to forget and think that we are being policed by, say, a regulator, rather than thinking that the age has changed, and even in our country, the regulators want the businesses to grow, but with due protection given to the relevant stakeholders. And those stakeholders could be public shareholders, those stakeholders could be other stakeholders like investors and third parties who are dependent on us in that sense. And that brings me to the point that organizations today use this buzzword a lot, of how do you build trust in the system. So not just from the point of view of customers, but I believe building trust is also important from the point of view of stakeholders, regulators or non-regulatory in nature, both ways, right? Now, especially in terms of a crisis. While a crisis is happening, I have seen that those organizations who've been swift in taking accountability of a particular issue, approaching its stakeholders with clear communication to say, we are accountable, we are committed, and we are here to protect everyone and the value that we have created for you, is the first thing that any stakeholder or regulator looks for. So I would say that in a crisis, therefore, you would understand that proactive communication, delivering with the right structure and with clear accountability, is the bedrock or the foundation to be able to start dealing with a crisis for eventually completely overcoming it successfully. Because let's understand, the whole purpose of dealing with a crisis is, one, to protect and preserve, and so that you can come out stronger from this, right? We all know this. I think in the volatile times that we've been living with, we've all come to understand this as well. But what I have seen really works is when we are rooted in data, and when we approach stakeholders on actions that we plan to take, actions that we are taking, and regularly communicate its progress and outcomes with data and information that can be backed up, like Sharad mentioned, with audit ready evidence, so as to say, that is what builds the most important initial links of trust between us and different stakeholders. And once those initial links of trust are established, it becomes easy to go through the whole process of mitigating and emerging stronger from a crisis, so as to say. Because without the initial trust, any and every action will only face more hurdles and scrutiny from different stakeholders, and the whole exercise can shift from dealing with a crisis to stakeholder management, in which stakeholder management should be a part of the whole and not the whole itself, in that sense. So I would say, based on my experience, someone who's very, very credible, and a single person who becomes a voice of an organization and can take accountability also becomes very critical. As much as possible, we can put all the different structures in place. Like we have seen when regulators have initiated inquiries, there have been independent directors initiating fact finding exercises with the help of external counsels, so that this is completely cut off from executive management and the corporate itself. We have seen that stakeholders have been asked to appoint their own agencies to carry out fact finding and step in where required, and take temporary control as well to be able to overcome a crisis. And all of these things only show that when you have nothing to be worried about or hide, and when crises have happened in due course of business or because of say sudden change of regulation, so as to say, these actions become high trust. But these actions can only be taken if due preparation has been done well in advance. And that due preparation means putting in the structures in place from the point of view of governance, from the point of view of systems, from the point of view of a response mechanism. So as to say that when a crisis hits, we are able to work in a way that only makes the stakeholders trust us and the process more than doubt it. Um, Also, given the digital age we are in, right? News spreads, and the word viral is more viral than ever. In this age of virality, there can be a lot of information, misinformation, disinformation that spreads. The only way this can be survived or overcome is when we base everything on a due process of transparency and audit evidence based and fact based, so as to say. So in that context, I'd like to Sharad, check with you. You've, in your experience, on a no-name basis, of course, been part of some of the crises that this country has seen, and that have been defining moments for a lot of different, enforcement actions, and especially in the last, say, 5 to 10 years, I would say. Right? What would you say are the key lessons that India Inc. should learn from these various enforcement actions over the past 3 to 5 years? And what can you share as insights about what points do regulators really worry about and are concerned about when there is a regulatory crisis that hit a corporate?
Yeah, thanks, Vishal. So there have been a good amount of published data both from MCA orders, SEBI orders, other regulators like RBI. So I think one clear message to the entire market, regardless of whether you are in a regulated sector or a non-regulated sector, I think regulators want to really protect the customers first, and therefore uh, one of the immediate impacts that can really be very harsh on organizations can be restrictions on ongoing business. Say, for example, uh, not to take any further customers. You've seen those orders against stockbrokers. Banks have been prevented from issuing new cards until they fix their existing compliance track record. NBFCs have been barred from taking or dealing in gold loans. So there are several activities on an ongoing basis can come to a screeching halt if you are caught napping on some regulatory issues. And that is something which the regulators are clearly sending a message that we will act with speed, depth, but with a customer focus. Really, that will be our core. Uh, mm, I think one of the bigger challenges is when the issues pertain to not exactly non-compliance, but non-disclosure. I think the regulators will become a little more harsh. We have seen that so look at actions taken by SEBI or by NFRA against companies or against the auditors. So I think the three focus areas that we have so far seen in very recent years. One is internal financial controls. I think all regulators are very, very touchy about you being able to demonstrate that there is appropriate maker checker financial control levels authorizations, all of that has been strictly complied with, has been strictly adhered to. The second issue is on financial transactions like loans and advances. Obviously, there has been a lot of abuse and misuse of that mechanism, and that is second area of concern for the regulators. The third one, which we all know has become the talk of the town, is related party transactions. So right from identification of related parties, and if you are a listed company or if you are governed by Ind AS, then are you able to really identify all the relationships which will fall into that category? Now regulators have gone a step ahead. They have said clearly we have identified several factors which can bring other entities, which they have now coined a phrase, potentially interlinked entities. So is the management, are the independent directors, are the auditors getting vigilant about these kind of entities and enforcing governance first before even regulators start looking at it? I think that is something which the regulators will really care for. That these are the very sensitive areas. The regulators have said so in loud and clear terms. At the same time, look at how particularly SEBI has dealt with UPSI matters, that there will be there will be mistakes made, there will be transactions which are not necessarily compliant of the approval regime. Somebody may be unwittingly doing a transaction without any intent or without any bona fide purpose. Now I think the regulators have said it multiple times that we don't want to really penalize investors for a PIT violation or a UPSI violation if the company itself has taken prompt and measurable action against the person. We don't want to penalize it twice over. I think that's a great position for coming from a regulator, because that at least tells the industry that the regulators are here, not here to punish, but to really empower the companies to say that you act with promptitude and we won't be really penalizing you. Obviously, there will be disclosures required, but the regulators are clearly not here to necessarily penalize. Um, I think there the what is also expected is a very prompt, transparent, and a very clear disclosure. So both under Companies Act and SEBI regulations, the focus is on two things. One, whatever financial data you publish, it must be compliant of the accounting standard. Number one. Number two, it must be clear and prompt, because the time within which the market should become aware of anything which is material enough, I think promptitude and compliance both go hand in hand. And if the companies are able to do that, I think the risks on non-compliance are much lower. There are far more stringent timelines when it comes to cybersecurity issues. It's like T plus 6, T plus 12, those kind of things. But they have also given very clear indications that when does really the timeline start? Are you sure that you have suffered an incident which is really reportable? The timeline will start at that moment. So it's not that just because you observe something which is an aberration, that does not trigger the timeline, but make sure, do your analysis, do your deep dive into the root cause. And if you are then sure that yes, we have suffered an issue, then clearly the timelines will come in. But the regulators do understand your difficulties in ascertaining the true facts. I think in some of the regulators, cooperation becomes very crucial. And say, for example, the Competition Commission, when they are investigating, they would certainly expect all transparent disclosures and very upfront cooperation in issues of competition commission investigations, compliance programs, demonstration how, how you are undergoing that compliance regime, and so on. I think data protection is here. It's a real policy with real money at stake. The penal consequences can be very significantly large as compared to the past. Of course, thankfully, the regulators have given you the timeline. So they have given a calendar where the DPDP rules will become effective. But that will be really so the message is very clear. You should be compliant. And if you are not compliant, be transparent. Go to the root causes. Resigning is not the way. And I think that whether it's for the independent directors, whether it's for non-executive directors, whether it is for auditors, all regulators have said that loud and clear. Resignation is not the way. Deal with the situation, stand up on your own, and rectify it. Maybe we will not penalize with you as harshly as you would have imagined.
Yeah, I completely agree. And I think so many important points that you shared, Sharad, bring me to another question here for Ghansham. Right now, as uh, all sorts of businesses are becoming tech businesses. There's a very thin line left between what was known as traditional brick and mortar versus what is digital or tech driven, right? And especially so in the whole fintech sector, from that perspective, protection of people and customers has become the top agenda for almost all regulators when it comes to the fintech sector of our country. And we saw a very, very drastic step being taken by regulators by bringing out a law that protects people from real money gaming in that sense, right? Knowing that it can become a really big issue and it can affect mass people at a very, very small strata of the company. All of this means there'll be a lot of regulatory inspections going forward as well. So Ghanshyam, how can companies whose focus is growth, who are in a very fast-paced environment, who are heavily technologically driven, face this and prepare for, say, regulatory inspections proactively, and especially because there is heightened and there will be stronger scrutiny, and especially on the fintech sector in that sense.
Yep, sure. So, like many organization would expect, regulatory inspection, maybe it's a scrutiny or some kind of a visit or some type of audit will definitely is going to happen. But when it will happen depends upon the, because even capacity with the regulators or the inspectors is also quite limited. So they also do a kind of risk-based kind of assessment where they see a high risk, then definitely that will be their focus area. But you never know, like because companies and the corporates are submitting information to various regulators, like through various channels, through regulatory reports, filings, disclosures, financials, and now the systems even with the agencies are becoming very very smart, right? And they kind of analyze the data. And I just take one example for example, anti-money laundering, all these STRs, CTRs being filed. So they have ability to cross verify, okay, where the transaction being originated, and they also identify a pattern like being originated by some set of individuals, and then they give a caution list, to the various kind of companies underway to stop transacting with them or put them into the high alert. So that's how they're kind of data gathering, data analyzing, and they're also using smart tools like AIs to kind of extract what is wrong with this kind of environment. So that's how the regulator look at the various, I would say, data submissions, and they come for inspection. Entities maybe which are highly regulated, Maybe what I can think of, what we have always been trying to kind of embed, a compliance by design. This is across tech and product, all the verticals. So whenever any new product is getting designed or any tech development is being done, so maybe the regulatory kind of expectation guidelines should be embedded. Maybe it's onboarding, that the customer onboarding, customer KYC, taking of the consent, and also the consent is irrevocable after a certain period of time. The design of the system should be in that kind of, it should give a flexibility to the customer to revoke the consent after a certain period of time if they would like to do that. Then maybe lending is a typical kind of interest to various regulator. RBI is the biggest one to kind of lend within the kind of permissible limit. And if you are lending to a customer who is not able to repay the loan, you are creating a unnecessary credit risk in the organization. We have seen the examples last 1 or 2 years. Shraddha already talked about the digital loan, or the kind of gold loan kind of a restriction on the various kind of NBFCs. Also, along with that, buy now, pay later, like, you just purchase and pay the kind of payment after a month, or you can break into EMIs. Also, unsecured lending, maybe to whatever amount, it's kind of, very easily kind of 50,000 to 1 lakh rupees are being kind of, given by various regulated and non-regulated agencies in the market. So that's how the lending kind of a portfolio should also kind of get aligned with the kind of RBI or regulators expectation. KYC I already talked about. So compliance by design across the business operations or the tech and the product is the key, because when the regulator will come in, so they will ask for the data, and if data is not complying with the regulatory guidelines, definitely there is a problem. That is number one. Then maybe second would be, I say, sometime, various function, product, tech, compliance. So there is a kind of communication gap, or is not kind of strong handshake. What has to be done by whom, and who is responsible for implementing, testing, informing the regulator. So could be a central regulatory repository, like, this is the entire landscape which is applicable to the entity, along with the clear accountability, responsibility, and what to do in case there is any non-compliance. Definitely, it will go to the board of directors or to the independent directors or be filing, but that will come after a quarter, when the filing is due. But what are the immediate actions should be taken, so that level clarity should be there in the this central repository. Third, which generally I always recommend, to conduct mock inspection, like, maybe through the internal audit or through the assessment by the management, or by taking help from kind of likewise regulatory audit agencies. They can do a pre-audit or mock audit on the ecosystem, and then identify, which is more like management-led, I would say, inspection, not a regulator-led inspection. That, okay, if same inspection is done by the regulator, what kind of gaps they would identify, and what kind of issues they would identify. So they will have some time to fix those, identify the root cause, implement whatever remedial action. So that could be a one another measure to have more, I would say, preparedness on the regulatory inspection. I think Akshat already talked about, and on the strong documentation and audit trail. So whatever we do, like maybe it's a change management, it's a maker check, financial transaction. So that is the key. If you are not able to prove anything with the evidence, a regulator will say, okay, this was not done. If you're not able to provide any sufficient evidence for any such of control, that by default it's assumed that, that control does not exist, or it was not operating effectively at that point of time. So having strong documentation and the relevant audit trail is the key, and the company definitely should have a strong record management, which is also a requirement from the regulatory guidelines. By 5 years, 7 years, depending on the type of data, that should be maintained always. And if, like, the clouds are nowadays becoming very expensive, then there should be good archival system, and that archival should also get tested. You can do a drill once in a year, once in a 2 year, maybe a half yearly, depending on, like, what type of data goes in these archivals. Then I would say, maybe last but not the least, building a cross-functional response squad, which having a kind of representation from the risk team, from tech, from the product, compliance, legal, and the business, who can come and talk about their problems, non-compliances, operation level challenges. Because when the regulator will come, so they will have a direct interaction with these people, and how your business is done. So they will take a I would say walk through all the KYC process. Show me how the KYC is done, how you do a video KYC, how you do audio KYC, how the document is collected, where you get the consent. So they will go through the entire journey, the digital journey or the sister journey, like whatever is being done, and then they will cross verify whether this is done with the spirit or like check in the box type of compliance exercise. So these are few things which I can maybe think of, which will help to pass the regulatory inspection with the lesser pain. It's more like long-term strategy, I would say, that it should be embedded in the compliance framework or the audit framework of the organization, So these things should be tested very frequently.
And I think between you and Sharad, there are two or three points that have come out that are so stark. One is technology and how much technology is being used by corporates and as well as by regulators. And the second is the multiplicity of regulators that have now started governing and overlooking organizations from different angles, so as to say, right? So I think over these 2 points, I'd just like to address one of these 2 points is about the amount of technology that regulators use. And we have seen, especially in some of the recent orders that we have seen that have come out from some markets regulators, as well as say, we've learned about actions taken by different agencies like the CCI or income tax. I think the first thing that every organization goes after is the systems that are used and the data that resides in them, whether it is pertaining to transactions or whether it is pertaining to communication, so as to say, right? Now, that puts all the onus on the organizations to make sure that that is kosher. And how do you put in the frameworks in place so that at any point of time, you are ready to be able to demonstrate with full transparency that everything that the organization has done in terms of carrying on business or in terms of different regulations, whether they're with respect to markets, whether they're respect to competition, whether they're respect to compliances, or from an MCA perspective or an AML perspective or whatever. How is it that the systems will be able to demonstrate that an organization systemically has actually complied with regulations, and aberrations, if any, would be abnormal, so as to say, right? I think there are times that we have seen international regulatory agencies go after training data as well, and want to check from the repository or the archives of trainings of whether or not an organization seriously implemented a certain policy, did it seriously conduct trainings, or they were mere tick in the box exercises, so as to say. So everything that we do to be able to automate more, we also need to know that the controls over that and that audit trail itself becomes a really, really critical aspect to be able to demonstrate compliance, both to stakeholders internally and to regulators, so as to say. So it means only using more and more technology going forward, right? Now, a lot of these governance structures are getting technology driven and automated, right? But even then, governance structures are heavily reliant upon the boards and the executive committees and so on and so forth. Now, while a lot of governance structures can be prescribed, and there are times when, in spite of having those prescribed governance structures in place, crisis can hit, which puts a whole question mark on how these governance structures were set up. Were they really truly independent in that spirit or not? Which means you better your governance more and more, right? Uh, so how much is enough? And this is a question for Sharad. So, Sharad, how much governance is adequate governance? And where do you really stop or arrive at a situation so as to say we are sufficient in terms of governance today? And please from your experience, please share some pearls of wisdom over there because you've seen all sorts, the highest, mediocre, and probably the lowest in that sense. Yeah. So your views on this.
Sure. Thank you. I mean, this by itself can be a whole topic for 1 hour discussion, but let me try to crystallize it as much as I can. So look at the ultimate responsibility resting with the board. Okay. What is it that the board can really do? So there are 6 critical documents that any board and even the senior management should really be concerned when they are crafting it, drafting it, preserving it. Um, so let's start with the first and foremost, the memorandum and articles of association. That's really the basic framework of the company. So how many times even that has been reviewed, revised, updated? That's one checkpoint that any board or management can really look for. Uh, the comprehensiveness, the kind of your ability to exclude applicability of certain provisions, all that is given by the law. Are we using those provisions enough to, customize our charter documents to our purpose? So that's one exercise that the board can certainly do. Then we talked about board policies. The regulations today, if you're a listed company, you will have at least about 19, 20 to 22 policies spread all across the domains, right from your whistleblower policies to committee policies to related party transaction policies and so on. So what do these policies really do? The policies institutionalize your decision making process, which means it becomes a personality agnostic and you have a more predictable and a consistent pattern of decision making. This would also mean that the ability to deviate from the policy, that margin of error is reduced, and that can be a great demonstration to say that we have a very well defined path of how we deal with situations. Now, policies are not sacrosanct, and this is something where we have seen some deviations or rather the shortfall. So you have a policy, as I said, that we have a accounting policy, we have a auditing policy, we have a governance policy, and so on. But and we have been certifying every year that they are adequate. You have instances, right? You have whistleblower complaints, you have issues, you have dealt with, you have taken people action, you have taken policy action, you have taken, amended your internal financial controls. Have you gone back to the policy and say that this needs a significant policy revision because we do not want the same event to recur in our organization ever again? So that is where the governance structure will lie, that it is not enough that you dealt with an event, but was the board, was the management quick enough? So that promptitude and measurable change that you are able to bring to your own policies to ensure that an ominous event will not revisit you, I think that's what will prove that you are adequately governed. The third document that I must talk about is the board agenda. They must be comprehensive enough. There will be third party, valuation reports. There will be professional opinions and so on. So is that really a wholesome agenda? Because that is the foundation of a decision making. Are you explaining to the board the rationale, the purpose, the objective of what decision you are seeking from the board? So the comprehensiveness and the wholesomeness of agenda is very crucial because that decides the quality of decision that you will get from the board. The fourth one, and this is more important for both the management and the boards, that are the minutes of the meeting detailed enough? Or are you still doing a very traditional, very cryptic kind of thing, matter discussed, resolution unanimously passed? I think the regulators and particularly courts have really questioned that we are asking you a very blunt question. Did you have a meeting at all? So unless there is adequate inclusion of what transpired at the meeting, what deliberations took place, how there was a consensus arrived at, where was there a difference of opinion, and how did really the board evolve that position to say that we will still take a decision, maybe with a tweak. All that should be seen in the minutes because that's the only place where the board can really demonstrate that they are functioning as directors. So minutes is one of the most crucial pieces. The next one, which is unfortunately not often looked at by many companies seriously, is the website content. At times, there are too many aspirational positions taken on your website because obviously it has been designed when you were a startup. You are no more in that phase, and then nobody is really validating every line, every sentence, every position that you want to take as a propaganda to the whole world. And therefore, with revisiting your website content frequently and to make sure that there are no misrepresentations, there are no statements which you cannot support by anything logically within your organization. I think that review of the website on a very frequent basis is crucial. The other document, which the last document, which is very critical also for the entire organization, is how you make your disclosures, how you make a stock exchange intimation for events, good or bad. Are you accurate? Are you prompt? Are you non-misleading? Is it plain English? And if you look at some of the principles that LODR has laid down, these are very commonsensical principles, but that's what we need to follow. So that's why they are called principles of corporate governance, and not these are not rule-based, obviously. Can an organization really preserve and protect the confidentiality of certain matters in even public disclosures? The legal answer to that is yes. The LODR does respect that there will be confidential matters which you cannot, you can't live in glass houses just because you're a listed company. And therefore, confidentiality is not to be, compromised for the sake of transparency. And therefore, that call, whether it is material, what am I going to disclose, how am I going to disclose, all of that discussion must get properly documented. Because when the questions get asked, particularly say from stock exchanges, that what did you do, when did you do, how did you do? Unfortunately, when these questions are raised, the time available to you is like 3 hours. Now you are not in a position to reinvent that cause all over again, and therefore documenting on a live basis as you take decisions, I think that that's very crucial. So, I mean, just to give you a stray example, can I health check of an organization? And let me just throw these questions. Can we prove that every critical filing or license is current? If the regulator asks for a specific trail, are we able to produce it in a few hours? Do we know the five biggest regulatory risks and who are the owners of those activities? Are we zero late filing governance or a compliance record? I think these are some of the issues which can easily be checked on a very routine basis to say that I want to. I mean, it's almost like a drill that assume there is a raid, and are we ready with this data in next 2 hours? I think that will be a good sample check for the boards to really become aware how prepared they are. On a
Well,
softer side, of course, any are the independent directors and audit risk committee, are they visibly engaged through their questions, minutes, actions, their communication with the auditors, their communication with the internal control teams? I think that minutization of all that will also be very good. So if all these questions that I talked about, if the answer is yes, I would say you are adequately well governed.
and you spoke about such a risk based approach, and I'm just uh, uh, I'm just inclined to kind of ask that, in a tech company, there is the thing that happens probably on a hourly or a 24 hourly basis is tech risks keep changing, right? And Ghansham, I think live that on a day in and day out basis. So can you tell us what are the emerging tech risk areas that are drawing a lot of attention from regulators today? And especially because the whole environment today is, I think, growth on steroids, right? And whatever these technology risks are, can you give some inputs on how companies should deal with these focus areas? Because these tech risks can have their tentacles not just from a technology law perspective, but they can impact various aspects of business depending on, the different types of regulations that will come to play on the business that they carry, or whether it's a fintech, whether it's an e-commerce, whether it's an ITES company, and whether they are jurisdictionally affected by just India, Europe, US, and other jurisdictions around the world.
Yeah, sure. Vishal, maybe I will talk about the emerging risk, not only from a regulatory point of view, but which are quite relevant
That'll be
like
great. Yeah,
nowadays. Yeah.
yeah, yeah.
Because the regulator would definitely expect a good governance around data confidentiality, uh, customer consent, due diligence on the KYC, and identifying any kind of suspicious transaction and all that. So that is I would say a backbone which cannot be compromised, or no one can afford to compromise on that, because that would lead to a regulatory kind of mistrust, and which can also disturb the business in going forward. Uh, so maybe I'll start with the latest buzzword, which is AI ML kind of model governance. So a lot of models are being used by kind of various tech companies, non-tech companies, on the decision making, or on the customer servicing, or maybe identifying what is the right behavior, how to approach customer, what kind of products are being liked by the specific, you can say, gender, or the age, or the religion, or the caste, or the kind of uh, at a segment level, what kind of group. So accordingly you can do a target marketing, which is called a performance marketing. So AI has kind of helped a lot to avoid, I would say, non-value ads. Otherwise, you are spending days, nights, a lot of cost on maybe targeting the non-contributing segments, which people are not relevant. Still, you are targeting to kind of send them a notification, bringing them on board, but they don't need that product. That is just very small or simple example, and that also goes maybe kind of lending, kind of decision making, like the customer has a good CIBIL score, that will have a high chances of repaying the debt within the time, and lesser credit risk, where you can offer a maybe more, I would say, competitive interest rate, risk-based approach. So this AI AML model are helping a lot, but on the governance side, are these are robust enough? Specifically around the documentation, that what are the logics has been built into kind of building these models, and the agents are being getting trained with the right set of data, and kind of whenever any kind of inspection comes in, maybe it's a black box type of testing, then you should able to get some reasonable assurance that this model is working in line with the a company's expectation, business objectives, and if any regulatory reference is also kind of I would say involved, it should meet that. You can't ignore or bypass any regulatory kind of kind of guidelines if that type of modeling is being used. Um, Second, around like a lot of data we talk about on the cloud, because nowadays storing data in the databases, because of tech companies specifically, data volume is quite huge. Fungibility of data, backup, restoration on cloud is very very easy, but a concentration on a few of the players, that is maybe creating a risk. I would say that how that is being managed. Like if one organization and data or maybe cloud goes down, it will have a worldwide wider impact. And we have seen some examples last year and early this year, outages few hour outages will stop your stock exchanges, because the authentication engine is off, and that engine is based in the US, and US is kind of nighttime there, and person is not available. Those kind of situation can also arise. So I would say cloud concentration and operational resilience. Maybe we can do just to answer that also, maybe focus on the DR drills, and we can also try to have multi-zone infrastructure, having a cloud vendor risk assessment. Something goes wrong, you have some backup plan ready. Maybe this site is not working, then other site will get operationalized. That sort of maybe a plan maybe can be thought about. Cybersecurity, digital frauds is being there, because in the digital era, cybersecurity and all these frauds are very, very smart. Whatever controls you implement, they will find some loopholes, maybe in the, you can say, APIs or on the authentication engines. So they will find some loophole in the man or middle man in the middle attack type of scenarios. With your data communication tunnels are not fully encrypted, then these may pose some vulnerabilities to external ecosystem. So doing, I would say, to cover this regular VAPT kind of drills on your kind of various ecosystem, on your network, your infra, on your databases. Sometimes company do on the I would say infra on the cloud, but the databases are generally kind of ignored while doing the VAPT exercises. So I would also recommend or suggest always that once you do VAPT on the organization as a whole, not on the selective certain ecosystems. So that would be third risk on the cybersecurity, digital fraud, and this can be maybe I would say reduced by doing this kind of VAPT or the regular checks, or maybe doing the API security testing, SOC maturity, fraud monitoring. If any transactions or type of transaction are reaching the threshold, then let's not wait for that to get materialized, because if these frauds start happening in a few days time, these will multiply. Because I don't know how this work on the fraudster side. They have very strong network, and once any vulnerability identified, within a matter of hours, it multiplies by 100 times, 1,000 times. It kind of evolves that fast. So better you identify all these vulnerability at very fast speed, and also plug them immediately without waiting for, like, or maybe endless root cause analysis, and then who should own this, who should do that. Immediate action should be taken. uh, Data governance policy, yes, previously, because the new DPDP rules kind of rolled out, although we have some time to implement, but we have to ensure all our systems, our documentation, educating the data owners in the organization that what is the right behavior as data fiduciary, what are the kind of your reporting requirement. If something goes wrong, then the reputation and the financial penalty, definitely it's kind of sizable, which cannot be ignored. Last but not the least, I would say, the API ecosystem and the third party risk, because nowadays, whatever transaction are being processed by the financial industry, API is being used, and these APIs emerging from not only from the I would say private players, but lot from the government agencies as well. Maybe it's you can say Aadhaar authentication, your kind of UPI transaction. For that matter, simplest would be FASTag, kind of you're charging while you're crossing the toll. Everything is UPI based, and if any compromise happen on the UPI kind of I would say networking or the communication, definitely that is going to impact. So API security nowadays is a critical risk for the organization, because for one transaction there would be 10 APIs involved, and at a design level, if we have sufficiently kind of encrypted and tested those environments, then risk definitely can be avoided or mitigated.
And everything you said makes me feel that organizations and regulators will be integrated in the future and be on a high speed highway of information. So, as to say that everything that happens would mean that organizations just provide some kind of an interface to all regulators. They carry on their business, and the regulators would automatically know the level of regulatory compliance that is happening, not happening. Like, for example, You talk about Sharad talk about health check, and I'll try and kind of sum this up also, because this last point also kind of has been touched upon by both of you. So like Sharad talked about health checks, right? You imagine a scenario where all our compliance systems are something that are adopted from the regulators themselves. What if they kind of give a compliance system for the whole country to say, this is your compliance system, everything automatically is integrated here, no manual entry whatsoever, and we will just check from ourselves on who's compliant and at what level, etc. Also, if they see therefore that there is a risk to stakeholders, whether they are to public or to investors, they would be the first one to know. And it was not a coincidence that we see regulators actually use ML, and we use technology that is using AI to look at public sources of information in our country today, to be able to generate early warning signals and red flags so that they can proactively reach out to corporates and say, well, is this something that we should be concerned about? Would you like to make a disclosure, or can you explain? And the proactiveness with which that is happening, it clearly shows that our regulatory agencies are headed in a direction that instead of them relying on responses that come to questions, they would know in advance on whether or not there are issues that are there already, right? Well, in that case, therefore, um, uh, the track records would already be embedded. I don't think an organization will have a chance to go and show a track record, because the regulators would already have one. I think those scores and scorecards would be maintained by them for different companies and corporates in our country, any which ways, and they'll be able to prioritize where to focus on from the point of view of regulation, from the point of view of scrutiny, because they would know different scores at different point of time, and being ready with audit trails and rates is going to be inevitable. So I have a feeling that agencies will not have to do black box testing only of the tech that they're going to use. I think they should be doing black box testing of what will happen in a scenario that they actually just land up integrating their entire tech systems with the regulators, or they have mandated to adopt that, or something that the regulator says that they need to adopt. So whether meetings will have to be put on minutes? No. I think, like, we are anyways recording board meetings. Those recordings are anyways there. I think those recordings are also accessible to MCA in that sense, right? But imagine that they get transcribed, and all across meetings there is a way to scrub what is happening, whether an issue was discussed, not discussed, and the question that a court needs to ask, whether you really held a meeting or not, will become a moot point, because you'd anyways know after a meeting, oh well, this meeting was not properly conducted, and there will be time to say, well, you didn't conduct this meeting properly, either you conduct it again, or you give us explanations on why these points have not been discussed in your meeting appropriately, put them in place. I think we are heading to a scenario where it will have its own pros and cons. You can look at it both ways. Either there can be over transparency and over scrutiny, or there can be zero to none, zero to hardly any opportunity to be able to navigate things that create an issue. So while I believe that today building regulatory credibility is pretty tough, given that there'll be a lot of technology, I think it will be pretty easy and difficult at the same time going forward as well. So having said that, I think I'd like to also thank you, Sharad and Ghansham, for joining this session today. This has been supremely insightful. Nothing can substitute the experience and the depth that you come from, and the points you touched really help us go back and think about the whole way in which we need to establish regulatory credibility in our country, and how we can actually make it simple if we have the right intent and technology in place. So thank you so much for joining us, and this has been a wonderful session. Yeah, thank you.